Hi, everybody. This is Ryan W. from Bear Bull Traders. I wanted to go over some ideas that I have, and really what I'm going to talk about here is kind of an introductory video. And if I see there's some interest in this, I'll definitely go into greater depth. But initially, I just kind of wanted to put it out there. My understanding of different things. Now, as pretty much everyone knows here, I mostly trade, or I really only trade the ES or the E-mini S&P 500. Just prefer that market. It just works better for my personality and my trading style. But the analysis that I use and the concept of what's called the contextual understanding of higher time frames or higher time frame analysis, basically, is really what it makes the bread and butter of this whole concept work, and that's just trading across the board. Now, this works on equities, it works on futures. I haven't tried it on Forex, so I'm not really sure about that. But really, what we're trying to accomplish is we're just trying to find where is major support resistance, on the higher time frames. Now, of course, to most people, this is somewhat straightforward, and you may not find any benefit out of this. But there's a couple extra pieces to this that I've learned and that I've found out that I've added over the years to my analysis here, and I find it beneficial. Now, just to give you a quick overview of what you're looking at, I use TradeStation for my charting platform. And right now, all I have over here is simply a daily chart, a 30-minute chart, a 60-minute chart, and this is what's called a volume profile chart. I'm not going to get into too much detail on this, but essentially what this does is this turns the volume that you see intraday at the bottom of your screen horizontally, it turns it on its side and makes it vertical. So what we look for when we look at these types of charts are what are called volume points of control, or high volume nodes. And they just further help to see where was price balanced, where was there a balance of buyers and sellers, where price didn't go up or go down, it just sat there because everybody was happy, there was equilibrium in the market, no reason to drive prices higher or lower. And that's a very important point to make note of when you're analyzing on higher time frames and lower time frames too intraday, because it just goes to show you, it'll show you that, hey, the market was stable here, there was equilibrium. If we test this area again, we can expect some sort of a reaction. Okay. Now, other things to make note of, as you see when I clicked on my daily chart, a million lines showed up. I have a special plugin or indicator, if you'll call it, for TradeStation that whenever I draw a horizontal or a trend line on one chart, it'll automatically replicate across to my other charts that are listening for it. So as an example, I'll use the 60-minute chart here. I'll drop a line up at the top right here at 2806 on the ES, and as you can see, this yellow line now appears on my 30-minute chart because it's a lower time frame chart. So whenever I draw something on the daily, it'll appear on my lower time frame charts as well. So let me just well, actually, I'm going to leave this here for now. So that's the overview of my contextual analysis of the higher time frames. This will work for really anybody on any platform. You just need a daily chart. 30 minutes, you may not even need the 30-minute chart. I just like a little bit more of an intraday perspective. But a daily and a 60-minute are more than sufficient. And if you can get a volume profile, or it's called market profile chart, that will be awesome. Most platforms, it depends. Like, this is the TradeStation version of their market profile, and it's not really what a market profile is. I mean, it gives you the same information, but it's not what you traditionally would see like on Market Delta's platform, and I'm sure other platforms as well. But like I said, it gets the job done, and in trading, you just need to make it work. It does nothing pretty. All right, so obviously this is the ES. I don't want to go into too much analysis on this because, like I said, I don't know how many people out there really watch or trade the ES. It's my specialty now, but regardless, this is basically what I'm looking at. So let me just delete some stuff here to make it easier. I've also been using Fibonacci retracements, and I have found them to be exceptionally helpful and powerful in my analysis. And there's a lot of talk about how reliable are they? How subjective are they? And look, at the end of the day, we're all trading. We're all looking for the same things to trade, whether it's a pattern, whether it's a support or resistance level, whether it's a Fibonacci retracement, whether it's an Elliott wave, whatever suits fits your bill. That's what people are looking at, and there's thousands of people looking at the same thing. So of course, why do you think support resistance works? Why do you think certain patterns work? Because everyone's watching it, looking, waiting for the same expected reaction to happen. So the Fibonacci, like I said, I found them really interesting. I use them on the intraday, on my 2-minute chart, my 5-minute chart, as well as on the higher time frames, because it just kind of gives me a base of what to look for, like where are going to be some potential, areas or zones where we may have some, consolidation or a slight pullback, or a launching off point. That's really, really what it comes down to. But, like I said, I don't want to get too crazy with this video. I just want to give you guys a kind of quick overview just so, you're pique your curiosity. And if you're interested, I'll do more. I would love to talk more about this. But anyway, back to the charts. So as you can see, this is the ES chart. I'll do a regular stock and equity here in a minute. I just want to kind of give you guys a quick overview so you know what the hell I'm doing. Like what are these squares for? So first things first.
200.
What we want to try to find here is what's called a balance area. And a balance area is simply an area of consolidation where price is at an equilibrium. You got buying and selling going on, but there's no real directionality. It's just caught in a range or range bound. I mean, there's several terms for it, but balance area is what I like to call it, consolidation, whatever. So if we look here at this ES chart, this daily chart of the ES, you'll see I've drawn out a few balance areas. I just put rectangles around them just to kind of get show you what it looks like. And like I said, I'll do this on another stock in a minute. But as you can see, you need a couple of days worth of data. You can't just, not going to have one day and have balance area because, you don't know what's going to happen. I mean, you can have a range day, you can have a trend day, you can have any type of day. But you need a few days to get your balance area. And really, what we're doing is we're simply drawing a rectangle around the balance. And this was a good, I think this was like a week or two's worth of, almost 3 weeks. Wow, 2.5 weeks worth of balancing going on right here. Okay, and this was back in May, and I simply just drew a rectangle right at the bottom here. This was a swing low at 78 3/4, and the top was right around 45, 45 whole, 45 half, somewhere in that range. And then, this gives me a balance area. This shows me where there was tight, consolidation. Now, you could argue that this was kind of a run, they kind of ran down. Maybe there was news this day and they just ran down the stops, whatever. So this is really, it's a single touch at the bottom here. Probably the rectangle would have been better suited right here at 04 quarter to 45 half. But like I said, it's left for interpretation. All we're trying to find here is where was the balance and, get our support resistance levels from that. So I'm going to go to a new stock here because this is making me freaking crazy. There's just too much, too many lines going on here. So let's switch over to Apple, all right? So Apple, now you're going to see some pre-existing, actually, let me get rid of all these old lines on here. These old lines I've had on for like 5 years now, so bear with me. Let me just get rid of all of them. Horizontal lines, goodbye. Okay, cool. So now they're gone. All right. So simple clean chart. That's what we're looking for. And as you can see, everything's nice and clean. So first thing we're going to look for here is we're going to draw a rectangle around our balance area. So right here, this is clearly a balance area. We have a nice tight range between 185.10 and 190.37, somewhere in that range. Okay. So simple thing. Grab your tool. You get the bottom. Oops, a little off there. Get the bottom. Go to the top. Let me just a scotch. There we go. And really what we're looking to do is this, this balance area is going to act as support and resistance. So, the edges of the balance area will act as support and resistance. So simple thing, I'm going to drop a line right here. There you go, and you can see it replicated across my other time frames. And I'll color code it just to make life easy. Make sure it's the right number. So it's 190.37. Oops, be helpful. All right, and then we're going to change the color on this. There we go, make a nice green. All right, and then the bottom of the balance area. Come on, there we go. We'll drop that here, somewhere in that range. And, these don't have to be exact, but you want to get as close as possible because you're just trying to find the overall range. All right. So, and as you can see, we drew in our support resistance from this balance area, and they replicated across my other charts. Now, this zone, the breakout of this zone happened on June 4th, okay? So June 1st, it was a weekend, so June 1st was the last day of the zone, and as you can see, looking at the price chart, I mean, you had a nice big bullish, full body candle with a small wick at the bottom, and it closed at the top of the highs, which is always a bullish sign. And as we can see, after the weekend, that Monday, we had a nice gap up, and it pushed higher for, 4 points, all right? So typically with balance areas, the longer and drawn out the consolidation, the tighter it gets, the stronger the breakout is going to be. So in this case, I mean, we had oh my goodness, I mean, almost a good 3 weeks or so of consolidation, which is a pretty long time. It's a tight balance, and as you could see, we had a nice push out, and it just, I mean, it go up super high, but it pushed up, 4 points, which is still sizable, regardless. Now, one other thing I like to do, and once again, this is contingent upon your platform. Every platform is different, is I like to find the high volume node of the balance area. So I have another indicator that I use for this. It's kind of a cumbersome way of doing this, and other platforms may be better, but I'll show you just so you get the idea. So the first day of the balance area was on May 7th, and the final day was on June 1st. So let me go into my indicator here. It's this guy right here. All right, and I said May 7th, right? May 7th. Oops, gotta put the leading zero there. Okay, and then 6-1. Perfect. Okay. So what I'm telling my indicator is it's called arbitrary. It's creating an arbitrary market profile basically. So I have to input the start and stop dates so I can get my proper market profile. Let me just make sure. Let me just lower this so it's not completely covering up our price action there. Just a sec. All right, that should be good for now. And did I turn off? Yeah, it's off. Okay, cool. So we'll turn that on. Okay. And now what you can see here is a market profile chart, basically, and it gives us a lot of great information here. So it's telling us the value area is between 86 and almost a quarter and 88.87. That's just the area where there was a higher concentration of buying and selling. That's where the market found value of this particular issue, or as Apple in this case. So it found value in that particular area. So price has met an equilibrium. Okay. Now it also tells us here POC, which is point of control. All right, and that was at 187.65. So what I like to do is I come in here, I drop a little line, I can get my tool to work. There we go, and that's 187.65. So we're going to change this. I'll make it stick out. Give it fuchsia. 187. Oh, it's actually pretty close on that. 187.65. Okay, so that's our point of control for this balance area. Now, what does that show us? So that tells us, like I said previously at the beginning of this recording, it's going to tell us that that is where the market participants found happiness. They found balance. That general vicinity. I mean, that's an exact number, of course, because that's how the calculation's done. But as we can see, the value area was about $2 thereabouts. That's where the market found equilibrium. There was balance. Everybody was happy, and there was no movement in price. A lot of consolidation, a lot of sideways chop action, because the participants are happy with where price is until something else comes out. Somebody comes in and buys a big position, sells a large position, whatever, news. We're not going to expect to see a large movement. Now, what you're probably noticing on the screen in front of you is on my 30 and 60-minute charts, those lines are acting as really, really cool support and resistance on the 30 and the 60-minute chart. Now, this balance area, and this is going back almost 2 months now, because here we are mid-July already. Jesus. So this is May, basically almost the entire month of May is our balance area for Apple. So by drawing those lines, we can look here. This is July 11th. You can see that the high volume node, the volume point of control from that balance area acted as a very strong resistance a couple of times here all throughout June. Let me zoom out here a little bit just so we can get a better idea. Okay, let's get rid of that. You can ignore this here. This is an old something else I left on by accident. Let's turn that off. Okay, there we go. However, as you can see, I use that. I'll put that back on for you so you can see. So as you can see, I use my arbitrary volume profile tool to create a volume profile on the 60-minute chart for a couple of days, as that was a balance area, and I wanted to kind of get a frame. And I use it on the lower time frames for intraday trading, for day trading. Whereas the analysis I'm showing you right now is extremely useful for day trading. Don't get me wrong, but I'm sure a lot of swing traders will probably use this analysis. I'm not a swing trader, so don't take any of my word on that. But I mean, the proof is in the pudding, as I say. And by looking at these charts, I mean, it really is very straightforward as to how these lines work, how these balance areas work, and how everything is impacted. So here we are. I zoomed out, and I mean, I'm literally the first June 1st was the last day of that balance area, so I'm a little past that. But regardless of that, here's the breakout from the high volume node. This is a green line. This is the breakout on the 4th, on Monday, June 4th, and it pushed up, and couldn't get any higher, and here we are, sell-off. It acted as support, because remember, once support's broken, once resistance is broken, it then becomes support, and vice versa. So acted as support for a little bit, jacked around, and then finally we had a nice sell-off back down into this balance area. So what are we trying to get here? So from a contextual perspective, now what the context is the higher time frame analysis. Like I said, it's the zoomed out. What is happening on the bigger picture? What do the market participants think is happening? What's going on here? So by drawing out key support resistance levels, by using market profile, finding high volume nodes, volume points of control, etc., you're giving yourself the upper hand. And what you're doing is you're finding out where was the value, where was the market participants, or the market makers, smart money, whatever you want to call them, institutional traders. where did they find value? Where were they keeping their orders? You know, where were the stop loss orders? Where were the market, you know, the sells, the buys, whatever. And that's a lot of that information is what you're going to glean from here. You know, like I said, from the higher time frame. And from a contextual perspective, you know, fast forward to today, and you know, we're just outside of that balance area, and it looks like, you know, now it's acting as a support level. Obviously, this is an older balanced area. I'm going to draw out another one here in a second once I'm done, just kind of going over this for you guys. But, you know, this balance area, considering how long it was a very powerful one. And not for nothing, the longer the balanced area, the more potent it will be, and the stronger the support resistance levels are going to be that, you know, cover it. But just looking at this chart, like I said, I mean, you have your support, your resistance, you know, mapped out for you, and that's really what we're trying to do here. And that's why I think, you know, if you're day trading equities and you trade a lot of the same stocks, like I know in Andrew's room, we trade a lot, you know, we trade MU a lot. There's a lot of the same names that come up constantly, and I think that if you were to sit down and do some contextual analysis, draw out your balance areas, find your major support resistance, do a high, you know, get the volume points of control, balance, you know, balance areas, all that stuff, it'll give you the upper hand because as you can see, after almost 2 months, this area, this balance area from the daily chart still held very true. I mean, look at the support level at 183.77. Yes, it peaked below it here. There must have been news, and like I said, I'm sure there's more information we can look for there. But you know, it got pushed right back up into it. The volume point of control acted as resistance, and the support held. I mean, you're talking for weeks here. I mean, a very long time. And here we are, broke above the high, you know, the volume point of control, tested the resistance, couldn't quite get above it, and here we are back down into the balance area from here. And we're just kind of consolidating, and we had some, you know, now we're back above it. So now it's, you know, the resistance has become support, and we just have to see how this area plays out, okay? So really, it would behoove you to spend some time in the charts and look back, draw your balance areas, do everything that I said, because I think it'll help give you an idea. Now, something else you can do, like I said, I have marked on my daily chart swing highs and swing lows, and these are also pivotal levels. I give these a lot of strength because when you have, especially if you have multiple taps at the same price, that just gives it more prominence, you know, more power to that particular price level. And you know, you also got to remember in stocks, in trading, you know, nothing is exact. You're not going to get an exact bounce off of this level. You're going to get a run past it. You know, it's going to go past it by a few ticks. You know, it could be $1. You know, whatever it is. You know, it will go past it before it then comes back into the zone. You know, and the way to know what's going to happen is you got to look at the volume. You got to intraday. You got to watch the time and sales. You got to watch what's happening. You know, in this area. What's the reaction? Because you know, a poke below a level, and this is something I struggled with for years. Here I am. I'm like, oh, I'm ready to go short below this level. But, you know, and yes, it may have been a quick scalp, which is more my style of trading anyway. But realistically, for that nice, long, drawn-out move, excuse me, you know, it would not have been something that would have worked out. So that's something, you know, like I said, it's tricky, but, you know, as you get better with these things and understand the contextual analysis, you know, you'll get an idea. And, yeah, I just zoomed out on my daily chart a little bit. And if you look here, we had a swing high at 180.62, it looks like. And I mean, not for nothing. I mean, the swing low of this little breakdown here on the what was that, the 25th of June. I mean, it came so freaking close. You know, nothing's perfect, nothing's exact. You gotta, you know, use your judgment. And sometimes, you know, it may be beneficial to give it like a zone, okay, or give it a few, like a 15 to 20 cent range, if you will, of where the line is drawn. So as an example here, just for looks like I do it on this chart, my bad. So just for a matter of understanding, now, you know, not every platform could do this, whatever. I'll make this thicker in width just to kind of highlight the area. So there we go. And I mean, that kind of gives you a general understanding that price is still trying, you know, testing that relative area. So like I said, it's all relative in trading. You don't have to get crazy with it, but just having an idea. And like I said, it's understanding on the bigger picture what is going on. Are we at support? Are we at resistance? Are we in no man's land? You know, who's in control? There's a lot, you know, a lot going on there. So there's that. So I'll draw another little balance area here. I don't really see much. This is kind of a choppy sideways mess here. I'm not really a fan of this little balance area. It was a consolidation. It was range bound, and it was kind of constrained within the range of the previous balance area. But just for illustrative purposes, just so you can get an idea and you can learn to do this on your own, I'll do it for you guys. All right. Now, to make things simple, I'm going to get rid of all the other lines just because I don't want to cause confusion. I'll draw them back in afterwards just so you guys get an idea, but let's just get rid of those here. So I'll get rid of the horizontal lines, leave the trend lines All right, cool. Clean chart again. All right. So here we go. We're going to go grab our rectangle tool. We're going to find the low, which is at 180.73, and the edge of the zone. So right there, right up to the top. Close enough. All right. So there's our balance area. And like I said, this isn't the cleanest balance area. It's kind of a bit of a mess compared to like, let me turn that other indicator off here, compared to this previous balance area, which was a little tighter, okay? So we're going to drop our lines. I said 180, yeah, close enough. All right, I'll make this green. Actually, I'll make it red. Red for resistance, green for support. I had it backward on the other balance area, but like I said, the colors are arbitrary. I just do like to do certain colors for myself, just because that's the kind of person that I am. All right. So here is our rough balance area. I'll draw in the market profile, so on June 19th through July 6th. So we're going to go here, go in here, status June 19th. And then I said June 7th, right, guys? I don't remember. I have a really bad head cold today, so my head is kind of in the fog. So let's see, was it the 7th or was it the 6th? All right. And when you do these market profiles, you want to get the balance area. You don't want to go too far past the actual, the last day, because it will give you misinformation. So you have to be kind of specific on this. All right, cool. So here we are. So here's our market profile, and our point of control is at 185.73. So we'll, here, you know what? Just because it's a real pain to do this, just click on the line. I'll give it the pretty color of whatever that is, fuchsia, and 185.73. All right, pop that down there. Okay, here we go. All right, so there it is. So, this balance area, while important, and as you can see, it has acted, prices traded beautifully around it. It's not as clean, to be honest, just because it's a shorter balance area, and it's, not exactly what we'd be looking for. But regardless, it gets the point across, and this is really, like I said, for display purposes and to kind of give you guys an idea, just so you can try it on your own. But still, look, resistance, we broke, the perfect pop above it, couldn't hold, came back down, tested it. It did break below it by, about half a point, I'm sorry, I'm thinking in futures terms, by about 60-ish cents thereabouts, and then it pushed back off of it. So like I said, this balance area, not the greatest. If we go back to our daily chart, we draw our swing highs and lows. We do see at 182.88, we do have a pretty major level up here, and God, this thing is so slow today. Come on. There we go. And as you can see, we tried to test it. Actually, was it today? I think that was today. Yeah, today's the 16th. Son of a bitch. Yeah, tried to test it, but couldn't get there. All right. So, this is one way of analyzing it, looking at it. This is the more clear-cut way, finding your balance areas. There are some traders out there that use go by the 3-bar rule, where you have 3 bars, usually of consolidation, and then you have a a move to the downside or upside, whatever. Like this is a little mini balance area right here. Let me just get rid of these lines for illustrative purposes. Goodbye. Move. Yes. Okay. I should probably create hotkeys to do all this crap, but I'm just too lazy. I have hotkeys for most stuff, but not for that. All right. So top of that balance, 182.88. Bottom of the balance. Come on, TradeStation. And TradeStation is kind of a clunky platform, so you have to, deal with it. Anyway, this is a little 3-bar kind of balance area, really ugly. Like I said, some traders follow these rules. I'm not really that picky on that. I like to see larger volume balance areas, because that's where you're going to get the bigger moves, the larger, movement. Although if you look down here, you had a little, a little itty bitty balance area. It was a couple of days, and before a nice move that came in there and pushed it right up, and had a nice big gap there. So, like I said, you have to use your judgment on these things. The best advice I have to you is go look at your daily chart, draw out your balance areas, and they have to be clearly defined balance areas. 2 bars is not a balance area. 3 bars is pushing it. Really, 5 days, 4 to 5 to 7 days is ideal, and then anything longer than that, and you're looking at, major consolidation for a potential, move one way or the other. Now, that's one way I do it. Really briefly, I'll go into the other way, and then, the other ways of looking at this, and then, like I said, if you guys are interested, then I'll continue doing more work on this. But in any event, so another thing I like to do is I just pull up a 60-minute chart just like this, and first I do the higher time frame, so I look at the daily chart, because a lot of times there's a lot of overlap. The same resistance point is visible on the daily chart and also on the 60-minute chart. But I like to look at the 60-minute chart. I like to map out where are the gaps. So we have a gap right here, a little bit of a gap up. Okay, it pushed up, became didn't really hold a support, came back down, and then we pushed right back through it. So finding going on your 60-minute chart, looking for the gaps, drawing those out, gives you a nice strong area. But also multiple touches at the same level, same price level right here. Come on, same price level right here. It's resistance. It's price bounced off of it, couldn't make a new high, pushed through, pushed off of it, and we're still kind of consolidating. It broke above it, and now it's holding, it looks like, but it's just not clean. So, you really want to try to get as many points as you can on the chart, touching for your horizontal, your trend lines, or I mean these are trend lines, but they're not. When I say trend line, when I think of a trend line, I think of a trend line like this. That's a trend line, okay? These are just horizontal lines, but they're giving you similar information. Where is price? What is price doing at these points? What do these inflection points mean for price? What are market participants doing? What are they thinking? Whatever. So, like I said, you go on the higher time frame first, draw out your balance areas, draw out your major swing highs and swing lows, major gaps. Like, look at the daily chart. You've got a monster gap right here, right there. Come on. Okay, and this is actually off the chart right now, so that's why we're not seeing it on here. I'll zoom out. There you go. It's right there. You can do that as well, but I like to drill down to the 60-minute chart. Some people made like the 120-minute chart or the 240-minute chart or whatever. Look, we're all going to accomplish the same goal here, and that's to find what is price going to do, what do we think price is going to do at these areas, okay? So by knowing and seeing these lines and these levels, we can make an educated decision as to, okay, and once again, on a day trading perspective, intraday, you watch the time and sales, you watch the market, you watch the orders to see how is price responding to these zones? Are we getting big volume into the zone, going to push through it, or is it just kind of teetering along and then time and sales slows down and tanks and goes off the cliff? Those are things you have to watch intraday. But knowing where these zones are is so pivotal, because if you're just trying to arbitrarily trade off of nothing, it's not going to work for you. Having the VWAP, having moving averages is all further confirm. And as you can see, the only moving averages I have on this chart, or sorry, on any chart, is my daily chart. And that's the 200, because that's the bee's knees right there. Everyone likes the 200 moving average, the EMA and the SMA is what I have here. On the lower time frames, I'm not looking at moving averages. I'm looking for major areas, zones, whatever you want to call them, where price has reacted or will react, and that's what we're looking to do here. And it's funny because before I started using market profile, I would sit here and say, why the hell did price just randomly bounce in the middle of nowhere? Well, when you go back and you draw out point of control from a balance area, like I did in the first example, price just respected it beautifully. Okay, so having that extra bit of information using market profile and where's the value area and price on a given day or over a certain frame, like a 5 to 10 day balance area, is going to really give you a big leg up in understanding what's happening. And as I said down here, this is the market, the volume profile chart. What I like to do on this, kind of like what I do with the higher time, with the daily chart and the balance areas, is, let me just get rid of all this crap here. Bear with me a second here. There we go. Okay. I just look at where was the high volume node for that day. So on the 13th, Friday the 13th, our high volume node was right around 191.5, thereabouts. Okay, and this is on the 13th. All right, that was this mess right over here was the 13th. But as you can see, it was still respected for price. Now, you want to go back a little further on the market, on the volume profile analysis, just because you need more information. You can't just say, oh, I dropped the line here. There was a volume, high volume node. Oh, price is respecting it. Well, yeah, that was yesterday. Of course, when you look back historically, you're going to see that the price probably touched it, but what happened before that? So, like, if we go back here, we had a little HVN there, a little HVN right there, and a lot of times they'll overlap or they'll be really close to each other, and you kind of just use your judgment on that. This is from the 9th. Let me go back a little further on this. Hold on. Let me find a really nice juicy one. All right, so this one's not bad. This one was okay. This one's not terrible. Okay. So these are from the end of June, all right? And that's what these two lines are right here. And, like I said, sometimes they're like, wow, that's perfect. Other times they don't really do much of anything. Once again, you got to use your judgment. If there wasn't much volume that day, you're not going to have a lot of nice clean moves, not a lot of what happened? You're not going to have what we would like. So, in any event, it just helps. It's just further information. Once again, you don't make a decision exclusively based off of, oh wait, there was a high volume node there from a month ago. We got to be careful. It's just information, and all we are as traders, we're data gatherers. We're risk managers and we're data gatherers. We're looking at historical information, trying to make an informed decision about a future move, and knowing where the different levels and lines and zones and a lot of the stuff are only going to further bolster your ability to I don't say guess, but to estimate what's going to happen. Okay, so that's pretty much it for now. Like I said, I didn't want to get crazy. I'm not going to go into fibs today, as much as I want to. Fibs are another ball game. I do find them extraordinarily helpful, especially with these balance areas. Um, but I think that if there's interest in this, I would love to go further into depth, just to kind of show you. I mean, really, what I covered today kind of was about all of it. But I could talk about um, excuse me there. I can talk about Fibonacci retracements, the volume profile stuff, that sort of deal. But I think this should be a good base for anybody who's interested. And like I said, I'm trading exclusively the E-mini S&P 500 at the moment, and I'm going to stick with that because that's just my preferred market, to be honest. And I'll definitely get more into that as I improve my skill set and feel better and more confident about it. But for now, I just want to give you guys an overview of the contextual market reading and higher time frame analysis, which I really hope will help you in your trading decisions. And if you have any questions, please feel free to reach out to me, Ryan, at bearbulltraders.com, or post a comment or do whatever you feel. And yeah, if you guys are if you're interested, I would love to do more of these types of videos. And yeah, that's pretty much it. All right, happy trading, everybody. Take care.